Hi guys, welcome back to this week's Technical Insights. The Straits Times Index jumped 0.96% or 31 points to 3,280 points on Friday, September the 15th. Sentiments were lifted across the regional market as Chinese economic data beat expectations. On the broader Singapore market, winners beat losers 351 to 227 after 1.8 billion securities worth 1.7 billion were traded. Other major markets in Asia region ended in the green as well. Japan Nikkei 225 was up 1.1%. Taiwan 50 FTSE Index gained 0.91%, while Hong Kong Hang Seng Index rose 0.75%. The People's Bank of China added a net 191 billion yuan into the financial system via a one-year policy loan, a day after announcing another cut to the lender's reserve requirement. This was coupled with the recent jump in China retail sales and factory output last month, which exceeded market forecasts. There's now a growing sense of growing optimism among investors who believe that the Beijing recent initiatives are showing signs of success, following the sharp sell-off in August that witnessed the record foreign funds outflow from onshore China stocks. For the week, the Dow Jones Industrial Average eked out a positive gain up by 0.12%, to close out the week at 34,618 points. However, the S&P 500 and the Nasdaq Composite Index both suffered a second straight week of losses. The S&P 500 was lowered by 0.16% to close at 4,450 points, while the Nasdaq Composite Index was down 0.39% to close at 13,708 points. The CSI 300 fell 0.83% to close at 3,708 points. The Hang Seng Index for the whole week slipped 0.11% to close at 18,182 points. Our STI Index rose 2.27% to close the week at 3,280 points. All three local banks were up more than 3% last week, with OCBC Bank gaining the most, up 3.78%, greatly outdoing the STI Index. UOB jumped 3.25% to close at $29.20. And DBS was also up 3.04% to close at $34.24. The biggest winner on our benchmark index last week was Wilmar International, whose share soared by about 4.11%. On the other hand, the biggest loser is Yangzijiang Shipbuilding, whose share price dropped a staggering 2.89%. So let's cover both of these stocks for this week's technical analysis and see if there are further opportunities available. First, let's look at Wilmar International. We covered Wilmar International about 3 weeks back in the 21st August Technical Insights video. Our observations during then were the indicators are starting to show signs that the downtrend may be losing momentum, and 18 September Friday closing price of $3.60 could be a good entry price to go long to target the 50 days moving average, which is the midterm resistance level at $3.80, or the 200 days moving average, which is the red line that you see here, which is the long-term resistance at $3.90. Fast forward to today, Wilmar share price has rose about 5.6% and has reached the first target of $3.80, which was the 50 days midterm resistance level. The share price has now broken above the white line as well as the yellow line, which are the 20 days and 50 days moving average respectively. And this is a very bullish signal. Wilmar share price is now testing the upper bound of their Bollinger Band and has reached a high of about $3.82 last week. The 200 days moving average is now trending around the $3.85 level or the $3.90 level, which we observed previously. And this is also our secondary target and the final target for Wilmar's recent uptrend move. The MACD indicator is now positive and the momentum seems to be accelerating in the past 5 trading days. According to the MACD histogram, the divergence of the MACD line and the signal line is also seen widening, another sign that the uptrend momentum is still building upwards. The RSI indicator latest reading on 15 September was 63, which is still in the healthy uptrend momentum range. But do look out for the RSI hitting above the 70-point mark, which would suggest that Wilmar share price may be overbought in the short term and a possible reversal may happen from there. So overall, I will still stick to my previous analysis of Wilmar and close out the position at the 200 days moving average, which is the long-term resistance at $3.90. This now also coincides with the 31st July high at $3.83. The RSI may also be hitting the 70-point overbought signal soon, and closer to this level, Wilmar share price may also face a lot of resistance at the 200 days moving average. So thereby, the 390 level would likely be a very strong resistance to watch out for Wilmar share price. Next, let's look at Yangzijiang Shipbuilding, which engaged in the provision of agency service for shipbuilding and related activities. And they saw its share price drop about 2.89% last week, and on Friday itself, it was down 0.59% to close at $1.68. For much of first half of this year, Yangzijiang Shipbuilding share price was range-bound between the year-to-date low of $1.09 and the high in May of around $1.30. On 27th of June, Yangzijiang share price experienced a gap up and jumped around 7% for that day. That was the start of the strong uptrend that we observed in the past few months. The price peaked around 29 August at around the $1.79 level, which is now the year-to-date high that we see so far. And the recent pullback that we saw in Yangzijiang share price has also broke below the 20 days moving average, which is the white color line, the middle line of the Bollinger Band. Now, this is also a bearish signal because it has broken below a short-term support level. The next support level for Yangzijiang share price is the 50 days moving average, which is the yellow line. And that line is now at around the $1.61 level, and this is the midterm support for Yangzijiang, which also coincides with the low of 4th of September over here, which we also see some rebound that happens during then. If the 50-day midterm support is broken, the next support would be definitely the 200 days moving average, which is the long-term support at $1.34 now, which will also cover the gap that you observed on the 27th of June at around $1.34. The MACD indicator is now negative, and the downtrend momentum seems to be expanding in the past 5 trading sessions. According to the MACD histogram, both the MACD line and the signal line are also trending downwards and looks to diverge below the zero baseline, which is another bearish sign that the negative momentum may accelerate further. The RSI indicator is now reading at 51, which is a neutral reading or having a very, very weak momentum. It has slided down from a high of about 78 somewhere on the 10th of August, and if the RSI breached the 50-point neutral mark, the downtrend momentum is likely to accelerate further. So overall, the technical indicators seem to suggest a negative outlook, at least for the short term, for Yangzijiang Shipbuilding share price, especially if it's unable to hold the 50 days moving average. And if that happens, I would not be surprised to see that the price accelerate towards the 200 days moving average at $1.34, which is quite a far bit away from the last Friday close of $1.68. So this is the end of this week's video. If you find this useful, do give us a like or a share and consider hitting that subscribe button to stay up to date to our latest updates. And I'll see you again next week in the next Technical Insights.